All right, everybody, I am JC Peretz, and welcome back to the stream. I wanted to pop in here today and talk about a few charts. You know, technical analysis, I feel like people look at it all, you know, lines and squiggly lines and moving averages and pattern recognition and things like that. But technical analysis is a lot more than that, because what are we doing as technicians? We are analyzing the behavior of the market and therefore market participants. That's what we're doing. And there are a lot of different ways to do that. You could do it in chart form, obviously, because what is a chart? It's just a visual representation of the changes in equilibrium between supply and demand. That's what a chart is. And it helps us do technical analysis. It helps us analyze the behavior of the markets. But there's also these bottoms-up scans that we like to incorporate to supplement all of the top-down work that we do. You know, it starts at the global macro level. We're looking at the stock markets in every country in the world. All of the commodity futures all over the world, all of the currency crosses, the intermarket relationships between them all, including interest rates. And then we dive into what's happening in the United States, and then individual sectors, and ultimately to the stock. But then we do the opposite, and we go bottoms up. So what we're doing today is we're looking at two different scans. One is our follow the flow report, where we're looking for unusual options activity, just big splashes in the options market, specifically very aggressive, very large directional bets in stocks and ETFs. We're looking at both. And then any idiot could just create an unusual options activity scan. The real magic is then going into that universe and hand selecting the best opportunities. So we're going to talk about the follow the flow report today. And we're also going to talk about the under the hood report, where we're looking for just unusual increases in investor interest outside the options market, things like social media, big volume days in the equities market, or insider transactions, things like that. We call it under the hood report because we're looking under the hood. But before we get into that, I want to show you one chart that I think every investor, no matter what, should have on their radar, and that's the S&P industrial sector. It's incredibly diversified. Keep in mind, the industrials have the highest correlation with the S&P 500 of all of the S&P sectors. And when you look at what's in the industrials, it's no wonder. It's super diversified. You got all the transportation stocks, right? Truckers, railroads, airlines. You got all of the logistics companies like FedEx and UPS. You got like human resource companies like ADP, staffing companies, aerospace and defense, big industrial machinery and engineering, just so many different industry groups within the sector of industrials. Is so diversified. I guess none of us should be surprised that it has such a high correlation with the overall market, right? The diversification speaks for itself. So anyway, here we are hovering near an important area, 100 to 102 sort of range. And I think that we have to make a decision at some point. As we approach the apex, let me just pull up where we are as we speak. We're around 103. As we approach the apex, a decision needs to be made, or the buyer is going to take control, and this consolidation is going to resolve in the direction of the underlying trend, which would be perfectly normal and consistent with, uptrends throughout history. Or is this continuation pattern not that at all, and we break down and reverse? And I think that would be a major bummer for the bulls, that's for sure. And a breakout, I think, would, got to give us a lot of conviction to be really pressing long bets in equities, really for the first time in about 6 months. Markets in general have been a mess. The cyclicals, as represented here by the industrials, really haven't done anything since May. June, July, August, we're going on over 3 months of just, 3.5 months of chop, even in the cyclicals. And you can go back to where a lot of stocks peaked in February as well. The IPO index, emerging markets, the NASDAQ advanced decline line, so many things. Biotech peaked in February, and then a lot more peaked in May. And I think this represents those that peaked in May. So anyway, just putting things in perspective, maybe something that you probably already know. Stocks were in an uptrend until at some point this year. We could debate whether that was February or May, but up until that window, stocks had done very well off the lows last year. And since then, it's been a churn in most stocks. Some stocks are doing well, most stocks are not. So that's the more top-down approach. And now let's get into the under the hood report. And again, let's remember what we're doing. We're looking for stocks showing an unusual increase in investor interest. That's all it is. That's all it is. We put together the universe, and then we dive in and see what stands out from both the long side and the short side. Keep in mind, these are not long-only scans. These two, we do have long-only scans. These two in particular, we're open-minded to industry group, market capitalization size, as well as direction. So here's this week's report. These are 60 names where we've seen an unusual increase in investor interest over the last couple of weeks for a variety of reasons, usually multiple reasons to land on this list. All right, and one stock that we like is the Novanta. So we're looking at a mid-cap electronic equipment stock, and 150 is the level there, showing an unusual increase in investor interest, breaking out on a relative basis and pushing up against those highs, right? Nice range-bound market. I mean, to be honest with you, when you look at the average and median stock in the United States, it looks like this, right? Kind of stopped going up in the first quarter, churning sideways, and now potentially breaking out. The bigger the base, the higher in space. NOVT, if we're above 150, I like it long with a target of 204. 204 on the Novanta. All right, now this is the follow the flow report. We're looking for unusual options activity. And again, specifically, very large, aggressive, directional bets in the options market. Buying calls on the offer, right? Very specific. We have partners over at the Trade Exchange that really help us filter through these to make sure that they're not hedges, that there isn't another leg to this particular bet that would make it either not bullish or turn it into bearish. There are different consequences by overthinking some of these splashes. So we got to make sure to eliminate those and specifically isolate those that are just monster directional bets. And so here's this week's list. And DD Global is one that stands out to me. We're looking at a Chinese software stock, about 30 billion and change in market cap. Had a ton of activity on November 19th, $5 puts on the offer. Someone's betting heavy. So we're looking at DD. Someone's betting heavily that this thing gets slammed. We only want to be short if it's below 7. So those are the lows from last month. So if we're not below last month's lows, you can't be short, right? If anything, you could be long if you really want to. I wouldn't do anything. I would only be short this. If we're below 7, I think it's probably a good level that puts us below these former lows with a target down near 5. If it's above 7, no reason to be short at all. In fact, the long position, I'm not a bottom fisherman myself. The way I learned it is that bottom fishing can be very hazardous to your wealth. And bottom fishing is exactly that. Here, I'd rather trade in the direction of the trend and in the unusual options activity. But from a risk management standpoint, it does not make any sense to be short if we are above the former lows, right? So we only want to be short if we're above those, target down near 5. Another interesting one is BitFarms. We were talking about it this morning in our crypto call. We do a crypto call once a week, specifically on cryptocurrencies and some of the derivative plays like ETFs and some of the individual names. BitFarms coming up on the follow the flow report showing unusual activity. And even if it wasn't, the chart still looks great. We were talking about it this morning. The market cap's about $1 billion, and they're Bitcoin miners, right? That's really what they do. They own BitFarms. They got a bunch of machines that are mining for Bitcoin. A ton of activity. September 17th, $10 calls on the offer. And 740 is the level there. So below 740, and that keeps us below all this overhead supply throughout the year. Classic, peaked in the first quarter, done nothing ever since. So many charts look like this. This one in particular gives us exposure to crypto. It's a beautiful chart in and of itself. And then clearly somebody on the some institution clearly agrees, putting on massive size for an expiration that isn't that far away. So this is happening now. But from a risk management standpoint, we only want to be long if we're above 740. Below 740, leave it alone. Only above 740 do we like this long with a target up above 10 where we want to be taking profit. And by the way, if you would like these slides, just email info@allstarcharts.com with the password bottoms up, right? Because that's what we're doing. These are the bottoms up scans. Info@allstarcharts.com. If you're interested in the slides, password bottoms up. And then also another one that we talked about this morning. This one didn't come up on any of the scans, but hey, we're talking about BitFarm, why not mix in a couple more crypto charts, right? There are no rules here. We do whatever we want, right? So 670, that's the level there. This is the anchored VWAP from the which is an anchored weighted volume average price, anchored VWAP from specifically the highs in the first quarter. Again, how many times have we talked about that? How many times whether the stock peaked in February or in May, there were just so many from those levels. So just an obvious place to anchor from. And if we're above 670, then the average participant is positive since that peak, which to me, historically, when I talk to these institutions, when they're going to put new money to work, they're going to put it to work where it's being treated the best. And if last time they put money to work there, it's not being treated very well, there's a lower probability outcome that they're going to allocate more assets. They're going to put good money after bad. If they're generally happy, if they're generally being rewarded for making this decision, they're going to continue to do that. 670 is the level there. If we're below 670, leave it alone. Above that, I like it along with a target of 1,000. And that's a key Fibonacci extension as well. Nvidia popped up with a breakout today. Also, one of our highly correlated crypto names. I shouldn't say highly correlated, but it's in the group, right? I'm not going to pretend to know the fundamentals of why this chip stock has exposure to crypto. I leave it up to you guys. I'm sure they're great things. I hear a ton of stuff. I don't know what's true or what's not. The bottom line is the chart is nice and clean. Clean charts, man. Don't we, as just like adults, don't we have enough headaches, right? We got, family and bills to pay and just responsibilities. And we have things, aggravation. So if you're going to now then go buy ugly, choppy charts and just give yourself more aggravation, that doesn't sound like fun, right? Clean charts, baby. Keep them clean. 210 on the Nvidia. We want to be long the Nvidia NVDA if we're above 210. Target up near 319. We're looking at about 50% of upside. That's not nothing. Maybe another 250 billion in market cap for Nvidia coming. And then I got to tell you, let's punch up as we speak here. We're looking at, so it is Monday after the market closes, almost 5 o'clock Eastern time, PM. And, I got to tell you, I expected, when we were buying Bitcoin down to 30,000, it was a clean trade, right? Because it was like, okay, if we're above 30,000, you buy Bitcoin. If we're below 30,000, you don't, right? It was pretty binary. As it turns out, that worked out very well. But our target was 47,000 or so, 48,000. Why? Because that was the neckline of this massive distribution pattern and why we got out of crypto when we broke those levels, right? So that's exactly what took place. And now we got back to the scene of the crime. And all of that former support theoretically should have turned into resistance. And it did, just for less amount of time than I would have expected. And as usual, the market doesn't care what JC thinks, right? The market's going to do whatever it wants. And then we have to take that information and use that to our advantage. So when the market, and I've learned this the hard way, folks, when the market is supposed to do something and it doesn't, that's information. So I expected there to be a little more trouble in Bitcoin here, and there wasn't. To me, that's a very positive sign. Again, they got to stick the landing. We got to get into the 50s ASAP. If you see this thing in the 50s this week, that's going to be very, very, very impressive. And I think we get back to the mid 60s. So 64, 65,000 is next, which represents about 30% higher. So here's the strategy. You can own Bitcoin if you're above those levels and feed the ducks around 65,000, or, and I've done the work, when you go crypto by crypto, you're looking at a lot more beta in those other names. And when you do the math and the calculations of the targets, like things like Binance or Litecoin, Cardano, you're looking at potential doubles from here. So 30% move in Bitcoin, you're looking at a lot of doubles, even triples, depending on how far down the cap scale you're going. And these days in crypto, you don't have to go that far down. You could still buy stuff that are 4, 5, 6 billion. That's a lot. It's equivalent to a mid-cap stock in the United States, some of which, we discussed here right before. So anyway, 48,000, we got to hold that level, 47, 48. If you're above that, you got to be long crypto. If you're not long crypto, I think by definition, you're short in that scenario because you're leaving that much alpha on the table. Cardano has been an absolute monster for us. Shout out Josh Brown, Michael Batnick having me on the Compound Show where we're talking about Cardano at $1.40. Here we are, 100% winner just in a few weeks. So at this point now, we just want to be responsible and not give it all back, because I've done that too, by the way, and I don't want to do it again. So the risk management to me is very clean. You got the May highs. If Cardano's above the May highs, you stay long. If Bitcoin's going to go up 30% and get back up to the mid 60s, Cardano most likely is going to do very, very well in that environment. You could potentially be looking at a stock near $5, which would put the market cap somewhere around 170 billion. Check my math, something like that. That's a lot, which is really interesting. We got in this thing around 35 billion, maybe closer to 40 billion, I should say. Whatever. Monster winner, and I still think there's a lot more upside, especially if Bitcoin can get going. So if it sticks this landing and you see this thing in the 50s this week holding it, because right now as I speak, we're about 49,500. So we're kind of in like purgatory, right in the middle, and it's deciding what it wants to do. So kind of keep that in mind. If we're below the May highs in Cardano, you know, there's probably trouble in paradise, and maybe we don't want to have the long exposure that we currently do. Also, on a relative basis, if Cardano was going to start to outperform Bitcoin, that was a perfectly logical place for that to happen. And again, the target was back towards those former highs from May, and we ripped right through that. So what did we say? When the market should do something and it does not, that's information. So like Cardano, in and of it, on an absolute basis, if we're above those May highs, you stay long. On a relative basis, if we're above those May highs, you stay long, right? And then, you know, this has probably been the worst trade over the last year. You couldn't have picked a worse investment over the last year than gold. I mean, you could have bought literally anything else and you would have made money. So I find it really interesting. The money continues to flow into cryptos. They're doing very, very well. Gold has gotten a little bit of a bid over the last few days, but what is it? You know, for me, it's I don't see the trade here. I'm just not seeing it. Long or short, by the way, right? I'm just like, if we break these former lows and we start trading below 1680, I like it short, right? Dollar's probably ripping in that environment if I had to guess, but I like it short. But I don't necessarily think that that's the case. I think the higher probability outcome here in gold is just, it probably stays messy for a while and then ultimately breaks out. That's probably what I think is going to happen in gold. But it's show me, right? This thing's a loser, been a loser, right? So it's guilty until proven innocent. To quote Brian Shannon, shout out B. Shannon, you know, guilty until proven innocent. That's how I look at this. So to me, you know, I'm going to talk to Sean, shout out Sean McLaughlin, our options trader. I'm going to talk to him about setting up some sort of premium income generating strategy here. I think both the longs and the shorts are going to be frustrated. So what that means is that they're giving donations to those who are selling premium, and I want to be one of those that collects their donations. So that's going to be the strategy for gold moving forward. And if you like the slides and you like a copy of these slides, email info@allstarcharts.com, password bottoms up. That's info@allstarcharts.com, password bottoms up. Folks, I'm JC Peretz. I hope you enjoyed this. It's my privilege and pleasure to share some of the charts that stand out in my world, and I hope that this adds some value to your process. I'm not here to tell you what to do. I'm not here to replace what you do, but maybe, just maybe, you learned something and maybe you got an idea or two. And if you did, shoot me a note and say what's up. info@allstarcharts.com. I'm JC Peretz. Adios.